Hello viewers, welcome again to Already Late. Prime Minister Mr. Narendra Modi announced a mega 20 lakh crore rupees stimulus yesterday 12th of May and left it to the Finance Minister Madam Nirmala Sitharaman to provide the details. The Finance Minister decided to give out this package in parts and the first part came out today 13th of May. Here is a simple breakdown of the first installment of what looks like a three-part series. I will highlight every announcement made by the minister and what is the likely impact on the economy. I will also give you how the equity markets may react and also the sectors that are likely to benefit from today's announcement. So stay tuned till the end to get the maximum value for your time that you are investing in watching this video. The first announcement was rupees 3 lakh crore collateral free automatic loan for businesses including MSMEs. All businesses with a turnover of up to 100 crore rupees and loan outstanding of up to 25 crore rupees can now take a fresh collateral free loan. Collateral free loan. How much? Up to 20% of their outstanding loan amount as on 29 Feb 2020. These loans will have a tenure of 4 years with moratorium of 12 months on the repayment. Interest will be charged during this period and has to be definitely paid. There is no need to pay any additional fee, nor there is a need to bring any fresh collateral. This loan is guaranteed 100% by the government. The facility can be availed by businesses and MSMEs up to 31st October 2020. While this is a good measure to reduce the distress, it seems to be incomplete unless the demand from consumers is revived. Paying your regular expenses like rent and salaries through a loan is not a sensible business practice. And unless there is clarity in the future of the business, I do not see many businesses going super excited with this new credit line. Further, with government guaranteeing this, what happens when there are cases of non-repayment? The government is definitely supposed to pay. And we know what's the favorite source of revenue for the government. It's taxes. So be prepared for some rude shocks if things go bad after companies avail these loans. The next announcement was to provide 20,000 crore rupees in the form of subordinated debt for MSMEs. Now, subordinated debt simply means unsecured credit. This is a measure to help stressed MSME who are already on the verge of bankruptcy. Government will provide 4,000 crore rupees to CGTMSE, Credit Guarantee Trust Fund for Micro and Small Enterprises. Now this CGTMSE is a fund created by the Ministry of Micro, Small and Medium Enterprises to provide credit guarantee to banks and financial institutions that provide loans to these micro and small businesses. Banks will lend to promoters who in turn will pump in this money into their business as equity. What will be the impact? To start with, the amount is very less. Though the government claims 20,000 crores, effectively it is putting in only 4,000 crores. Also, will these MSMEs revive themselves? Again, the answer depends on how the demand can be stimulated, and hopefully we'll get some answers from the government in days to come. The next measure announced was 50,000 crore rupees equity infusion through a fund of funds called MSME Fund of Funds. Government will set up a 10,000 crore fund of funds, 10,000 crore rupees fund of funds, and invest in MSMEs which have growth potential and seems to be viable. Government expects to leverage its 10,000 crores to a total of 50,000 crore funding. The objective again is to help MSME expand and grow. This is a positive move, but what needs to be seen is how this fund of funds is made operational. I can only hope and pray that it doesn't fall prey to the bureaucratic processes and policies. Government has revised the definitions of micro, small and medium enterprises. The revision is on the upside because a lot of small businesses do not want to grow as of now because they do not want to miss out on the benefits that they receive by being a SME. The revised definitions have combined manufacturing and services into one, unlike earlier when they were separate. The revised guidelines for definitions are as follows. For micro, earlier it was investment less than 25 lakhs for manufacturing and less than 10 lakhs for service. This is now revised to investment less than 1 crore and turnover less than 5 crores. For small enterprises, earlier the classification said investment less than 5 crores for manufacturing and less than 2 crores for service, which has now been revised to investment less than 10 crores and turnover less than 50 crores. For medium enterprises, earlier the investment classification was investment less than 10 crores for manufacturing and 5 crore rupees for services, which has now been revised to investment less than 20 crores and turnover less than 100 crores. This is one measure which will not have an immediate impact on the economy. It will not have an immediate impact at all. But there will be many industries who would want to expand once the economy shows any sign of recovery. So this is definitely a long-term positive move. Should have happened long back, but yes, we have done it. The next measure was that global tender will not be allowed for amounts up to 200 crore rupees. Perhaps the biggest push on the vocal for local campaign is this move. Only Indian companies will be allowed to bid for all tenders for all government procurements up to 200 crore rupees. This is a big positive for the Indian MSME space. Now this space, the tender space, was witnessing intense threat by foreign companies, especially the Chinese counterparts. What needs to be seen is how the government rolls this out, as there are a lot of areas where we rely at the moment heavily on equipments that are not made locally. In all likelihood, we will see some sectors will be exempt from this condition right now. There will be focus on Make in India, and gradually probably we will have completely local. The minister also spoke about other intervention for MSME. The government mentioned about e-market linkages for MSME instead of regular fairs and exhibitions. There are also plans to use fintech, use of technology in finance, to enhance transaction-based lending. Now, how these things get implemented is something we have to wait and watch. So not exactly a stimulus right now, but a good long-term measure. The impact of this cannot be gauged until we see some groundwork happening. After the MSME bonanza, the next announcement was rupees 2,500 crore EPF support for businesses and workers for 3 more months. The government had given for March, April, May earlier. Now it's extended to June, July and August. So in the previous economic package, the 24% EPF, 12% employers contribution, 12% employee contribution for all those employees whose wages are less than 15,000 per month, and for all those businesses where there are less than 100 employees, was extended earlier also. It will be done now also. Now this will add 2,500 crore liquidity in the system. This is a welcome move which helps small businesses to tide over for at least 3 more months. The minister also reduced EPF contribution from 12% to 10%, which results in 6,750 crore additional rupees in hands of salaried individuals like most of you. This will result in a higher take-home salary, but at the expense of lower savings in your provident fund accounts. This measure will bring in definitely 6,500 and 6,750 crores to the system, which would have been in the PF accounts. Now this is the first measure where we can see some effort being made to boost demand by adding additional money in your hands. But with uncertain employment scenario, it is unlikely that people in the current scenario, they are not in the mood to spend this additional 2%. So you might see this 2% additional being saved in some other form, but definitely less of spending. The next measure aimed at providing relief to non-banking financial companies, housing finance companies and microfinance institutions in the form of 30,000 crore rupees of liquidity facility. These institutions are in a bad shape due to the slowdown. This is an additional liquidity in the system to help these institutions raise capital. In a related measure, government has announced 45,000 crore rupees liquidity to institutions with lower credit rating with a guarantee to the extent of 20%. What this means is the government is ready to compensate banks in case of default by these institutions to the tune of 20%. But the rest 80% will have to be borne by banks. Will banks bite the bullet? Highly unlikely given their already stretched balance sheets, deteriorated financial conditions. The next big number came in the form of 90,000 crore rupees as a liquidity injunction to DISCOMs, which is power distribution companies. Now these companies have to make a payment to the tune of approximately 94,000 crore rupees to power generating companies, who in turn have to pay banks. This 90,000 crore rupees will come from Power Finance Corporation PFC and Rural Electrification Corporation REC. What this will do is provide the much needed liquidity in the power sector and also reduce the stress on a few banks which have high exposure to these power discoms. There was a relief provided to contractors catering to all central government agencies. They were given an extension of up to 6 months to complete their work without any additional cost to them. Further, their bank guarantees will also be released partially. A welcome move to all the contractors dealing with central government agencies. Their businesses will see some liquidity because of the bank guarantees getting released. The real estate sector received a small boost with extension of 6 months for registration and completion of real estate projects under RERA, and another 3 months extension if required. So it could be totally 6 plus 3, 9 months of extension. So a minor positive for the real estate sector too. Finally, 50,000 crore liquidity was induced by reducing TDS, tax deducted at source, and TCS, tax collected at source rates by 25%. If your TDS rate earlier was 10%, it will now be 7.5%. Nothing much to cheer here because you still have to pay full tax while filing your income tax return. So enjoy this extra money for a few months. The government also decided to release pending refunds immediately. When I heard this, I was amused. How is returning your money back to you part of an economic stimulus? Absolutely no idea, and I would not want to comment on this. The last announcement was pertaining to extension of due dates. The due date for filing returns has been extended from 31st July to 30th November and tax audit from 30th September to 31st October. This is something we are already used to, COVID or no COVID. So I don't see why it was part of the stimulus announcement today. Let me summarize the entire stimulus announcement made today in 2 or 3 sentences. The government is getting other institutions to spend money and is limiting its role to providing guarantees. Strange? Not exactly, because the government has no other choices. Its finances are already in a big mess. Lower tax collections even before COVID. No disinvestment is happening inside. All the disinvestment plans are on the back burner. So there's no way of collecting additional money. So how much of the 20 lakh crore was announced today? I have seen a lot of people ask that. I may disappoint you, but the 20 lakh crore number is in itself is a big farce. There is no 20 lakh crore happening. Take an example from today's announcement itself. 3 lakh crore loan to MSME. Is government putting in the 3 lakh crore? No, the banks will. What is government's contribution? Only to the extent of default, which could roughly be 15 to 20%. The average corporate default rate is around 17%. So somewhere between 15 and 20. This means on the upside, government will actually end up contributing 60,000 crore rupees over the next 4 years. Remember, the tenure was 4 years. Similarly, how can the government claim 45,000 crore liquidity to NBFCs and MFIs when they are taking a hit of maximum 20% only? Well, we cannot do much about the communication from the government. what we can do is understand what may happen to the economy in general and markets in particular. These measures will definitely add to the liquidity in the system, undoubtedly. A lot of MSMEs will be revived, and these measures are definitely positive for MSMEs. The magnitude of impact can only be ascertained once we know what the government's plans are to boost the demand, which hopefully, definitely, keeping my fingers crossed, will be announced in the next couple of days. From today's announcement, some clear sectors that seem to be in a better position than what they were before the announcement. Banks, the credit guarantee on some loans, adding to the liquidity, adding to the DISCOM's liquidity. So definitely a lot of banks will feel better after these announcements. The next sector that seems to be headed in the right direction is NBFCs and MFIs. So good NBFCs, good MFIs will get the much required liquidity. And real estate, as I said, gets little respite with blanket extensions. They don't have to follow project by project. Now that is it for this video. I will be back with you analysis of my next set of announcements. Hopefully today evening we will again see a lot of announcements. So if you like my simple analysis, do share my video, do like the video, comment if you have any questions, and please subscribe to the channel. That's a good encouragement for me. Thank you. See you soon.